We keep obsessing over finding the right stocks all the time, but there is a skill which is more important than just finding the right stocks. Today we'll understand a very interesting concept and we'll use cricket as a metaphor to simplify our understanding. Let's look at Abhishek Sharma first. He is a very aggressive player. Each and every ball that he plays with an intent to hit a boundary. But because of this intent, he also has a higher risk of getting out. So a player who has high risk and high reward can be equated with an asset class which has high risk and high reward. And in this case, we can equate Abhishek Sharma to equities. When the pitch is flat, the boundaries are short, players like him can get you a lot of runs in very short period of time. Similarly, when the economic outlook is good and there is too much optimism around, asset classes like equities can give you high return in a very short period of time. But the problem with players like Abhishek is that when things go bad, they go really bad. If he gets going, he gets you a lot of runs in a short period of time. But if he doesn't get going, more often than not, he gets out for single digits. Similarly, in equities, if the economic outlook weakens, the future looks pessimistic, then asset classes like equity can bleed up to 20-30% a year. So if we look at the risk profile of this player and this asset class, we can classify them as high risk, high reward. Now let's look at Shubman Gill. Now a player like Shubman Gill will rarely give you an innings where he hits 100 runs in just 30 balls. He will play a bit slower than other players, but one thing that he'll provide you with is consistency. We can equate a player with such attributes to asset class called fixed income. You know that your FD is not going to give you 20%, 30% returns in a year, but one thing that you're sure of, that it will give you consistent returns of 6-7% for a long period of time. Even when conditions are tough, the pitch is tricky, the ball is swinging, players like Shubman Gill will still end up scoring 30-40 runs. Similarly, when the economic outlook is weak, the development is slow, your FD will still give you a return of 6-7%. So Shubman Gill and fixed income products can be categorized as low risk, low reward. Now let's look at Virat Kohli. Whenever things get toasted and other players collapse, he is the one who comes to the rescue, just like he did in the 24 World Cup finals. Whenever players like Abhishek and Gill fail, players like Kohli save us in that situation. He anchors the innings and helps the team survive difficult moments. Yes, the strike rate might be questionable, but it saves the boat when it's about to sink. When no one else is able to perform, the last person that we trust is Virat Kohli. We can equate a player with such attributes to gold. When everything else seems to be failing, gold is an asset class which you want in your team so that it saves your portfolio during difficult times. When the entire world is under geopolitical and systematic threat, we have seen what gold has done and saved so many portfolios from dying. The Indian markets have had negative returns since October 24, but gold has almost doubled since then. Now just the way we keep comparing Abhishek Sharma with Vaibhav Suryavanshi and compare that who is a bigger hitter, the same way we keep comparing stock A with stock B. But the reality is we forget to analyze the conditions underneath. If the pitch is tricky, the ball is swinging, both players like Abhishek and Vaibhav will fail. Similarly, if the underlying conditions in a country are such that the equity markets are going to underperform for the next 2 or 3 years, it doesn't matter whether you pick stock A or stock B. Both are probably going to give you negative returns in the next 2 or 3 years. Another mistake that we do is we keep comparing asset classes against each other. We keep comparing that gold is better than equities or equities is better than fixed income. It's similar to us saying that Gill is better than Kohli or Gill is better than Abhishek. The reality is that all these players have different attributes and each of these attributes are important for the team to win. Similarly, each asset class has different attributes and each of these asset classes are important for the portfolio to do well. For example, in a long tournament, when the pitches are flat, players like Abhishek Sharma will do better. Similarly, when the economy is doing good, asset classes like equities will always outperform other asset classes like fixed income and gold. But later in the tournament, when the pitches become slow, the ball starts to move, players like Virat Kohli and Shubman Gill are going to do far better than players like Abhishek Sharma. Similarly, when the economic outlook is not good, asset classes like fixed income and gold are going to do better than asset classes like equity. The number one investment rule is asset allocation. Before we dive into which stock is better, which debt fund is better, whether we should buy physical gold or a gold ETF, before figuring out these questions, the question that you need to figure out is that how much of my money will lie in which asset class. If you pick the wrong asset class at the wrong time, even if you pick the right stocks, you are still going to lose. If you put 90% of your money in equities when the economic outlook is weak, even if you pick the right stocks, you are still going to lose money on that. Whereas if you realize that the future is not that great and you are pessimistic about the markets, you can allocate a smaller percentage to equities. Maybe you can allocate 40% or 50% of your money to equities and the rest 50% to fixed income and gold. In this way, even if you pick average stocks, your overall portfolio will still perform better. So asset allocation is the first thing that you need to do before diving into other things. Figure out the current situation of the economy and figure out that which attributes are going to grow your portfolio. And on that basis, pick the asset classes who have those attributes so that your portfolio can grow in the given condition. If you like this type of content, you can watch my other videos if you feel like. So, yeah, thanks for listening.